Well, it has been really refreshing listening to various comments on the better side of commodity, which is finance, and that touches every part of us, which is from farmers, that are the producers, to procurers, to processors, traders, corporates, distributors, and of course the end users. I have a very nice clean panel here with me, from bankers to of course exchange and NBFC as well, and we will try and get to the growth and opportunities as the topic has been given to us. But before we start, 25 minutes is what we'll keep to. Initially we'll start with 2 minutes of an opening comment from all of our panelists, and then of course we'll do a 10 to 15 minutes of a discussion here. So, Gurinder, let's start with you and what your opening comments are about growth and challenges that commodity finance is facing at this point in time.
Yeah. Since morning we have seen a lot of analysts have discussed about what is the market size available to us. We have seen that 60% of our population is into the agri production side. We have seen that there is a potential of almost 100 lakh or 1 lakh crore of commodity lending opportunity which is available to us, where we are just catering to hardly 35 to 40 crores through most of all of the banks taken together. So there are certain issues regarding why there is a huge gap in the entire commodity pattern. So if you see a farmer who produces his produce, he has to travel long distances to a mandi. And while you can say he reaches there, he doesn't have any opportunity but to sell it, or you can say to leave it there with a local money lender and take that cash in hand and go back to his place. So there is a huge challenge in the entire infrastructure in per se. We have discussed, we have understood that there is, you can say, a warehousing space which is short in supply. So the first solution to it is that we need to have a block level warehouses, maybe in the brick and mortar style, or silo is the way forward, where you can say WDI need to, you can say, work out on the strategy in terms of how the silos, you can say, need to work, and as well as how the funding on the silos need to come about. So this, if we are able to, you can say, break that code, and more or less most of, you can say, warehousing companies participate in the building up of the silos at the block level, where the farmer need to travel much lesser. As Dr. Alambil is the author of the Planning Commission, in the 12th Commission, it has been very clearly, you can say, understood that the travel distance need to reduce drastically for a farmer, and it should be close to 5 to 10 kilometers max, whereas at presently, you can say, most of the farmers, they have to travel long distances. Just to put a, you can say, idea, in Punjab, it is almost 70-80 kilometers, and going to northeast is more than 1,000 kilometers a farmer has to travel. So building up of this infrastructure is a very important aspect. Now from the banking point of view, where you can say I want to draw attention is that we spoke about the FPOs contributing toward the end, you can say, farmer solutions in terms of providing them the commodity finance. Because most of the bankers are not very comfortable working with FPOs given their articles and various, you can say, legalities between them. That is where the NBFCs may come into a role where, you can say, NBFCs can work as the business correspondent to various bankers, and subsequently the funding can be provided through a NBFC route, which mitigates a certain quality or a risk to these bankers. So that is one area where you can say I need to emphasize that role of NBFCs need to enhance in the commodity lending space. We have seen, because the offering to the customer is so low in terms of you get anything between 10.5% going up to maximum 11.5% in terms of a lending rate to a farmer. A NBFC cannot contribute out of its own funds or whatever borrowing we do from the bankers. But we have a better understanding in terms of on the ground level, where we do a lot of funding activities in the agri value chain. If we are addressing a farmer for his other needs, like somebody was speaking about a LAP as a portfolio to an agri customer or a home loan to an agri customer, those customers are who go to a mandi to sell their commodity. But as a lender, I can't, you can say, offer him anything. So this is one area where banks need to explore, the NBFCs playing a vital role into the commodity funding. Thank you.
Various logistics, interest rates, and all of that really is one of the views that we need to look forward going ahead. But coming to you, Ashish, we of course were talking about how the pledge finance is something that is a bit of a concern. Agri-value chain finance is something that we were talking about as well. How are your opening comments, and what does come on top of your mind when we talk about commodity financing?
Yeah, thanks, Manisha. I'll take it from Mr. Gurinder, just to give you a sense of gap in this commodity finance space. Morning, Mr. Jina was telling that annually crop of worth, agri crop of worth 8.5 lakh crores are produced on Pan India. And if you see the commodity finance, we have hardly less than 50,000 crores. So you can see how big is the gap in between this commodity finance, pledge finance, vis-a-vis the agriculture crop value. So of course there are many factors which are limiting this growth. I'm not going to touch upon all those issues, yes, but definitely one or two issues I'm going to address. If those issues can be taken care of, this business is going to, this will give you a fillip to this business in coming years. So during my presentation I'll give you that part.
Sure. Mr. Sebastian, we talked about the farmers. That of course is something, the first joining point is a farmer, and how do you see them evolving? What is the kind of growth that we need to start putting there first?
From a banker's point of view, I think we are kind of constrained and compelled to explore the options of funding the farmers through the WHR. I am making this statement on the basis of the revised PSL guidelines that has mandated the banks to give 8% of the NBC to the small and marginal farmers. Now, over the years, most of the banks, barring some old generation public sector banks, have achieved this target, and it is not an easy task. So it makes sense for the banks to explore the option of funding the farmers through WHR finance to achieve this target. Now the questions will be, the ticket size obviously will be small. When you say funding the farmers, if you fund the large farmers, of course the ticket size will be there. In terms of SFMS farmers, the ticket size will be small. Therefore, the cost of administration will be there. So it makes sense to have a level of aggregation. The aggregation can be either in the form of a JLG, or it can be at best the FPOs. Probably the FPOs will be the ideal level of aggregation, where it will be most convenient for the farmers and the bankers, not only for the bankers. In case, the concept of FPOs have been discussed at a level wherein the corporates are now thinking of putting some GMP, good production practices, agri practices in place, and getting their produce with a minimum assured quality. So in that space, the funding through the FPOs will assume importance. And I agree with Mr. Singh. You see, the location of the warehouse has to be near the farmers and the fields, because otherwise it will be difficult to cater to this segment.
Thank you. We of course will come back and talk more about that. But Pravin, this one is to you. This is a common norm that bankers do not like commodity financing. If they do it, that's because of out of the norms, out of obligation. Do you see that changing, or majorly it's because of the kind of liquidity that you get in the near term? Is that changing? Is there growth or opportunities coming in for that?
Definitely, commodity financing is a very good opportunity with the banks, and it is a very good product in the portfolio. I would like to touch upon the various the data which we have all spoken today morning, even now. 8.5 lakh crore is a commodity business size. Commodity trade is happening, and commodity business, the pledge finance, or we can call it as a regulated finance through warehouse receipt, is around 40,000 crores. It's called AUM, so financing would be around 30,000 crores. The gap, again, the gap is because initially when the commodity business, the commodity product launched, even the RBI PSL guidelines were made, I believe it is to have a post-harvest facility to farmer once he has a KCC loan as a crop loan, and once it is harvested, it would get compensated by way of a commodity loan. The harvest will get pledged, and the KCC loan will get repaid. This was the basic thought process. However, if we see, the crop loans are at around 7.5 lakh crore, rather the entire agri credit, out of which crop loans will be around 5.5 lakh crore. However, the commodity finance is only 50,000 or 40,000 crores. So there is an immense opportunity to grow ourselves as a commodity product. Although it is addressed in any other way of the form of the banking products, like working capital or any bill discounting or financing to processors kind of thing. One of the points that I want to make is regarding the WDRA, where I am finding a very, I would say, it's a very good opportunity that WDRA has been created in 2010 with a motive to create the warehouses as well as issuance of the negotiable e-receipts. Now, when we see this 5 years down the line, there are hardly very few warehouses which are accredited, and the percentage, all bankers are here, we know what are the percentage of financing to negotiable warehouse receipts rather than the normal WHR receipts. We know it is a better thing, but just because the WDRA accreditation acts as the one layer of additional license to that particular warehouse, rather than it has, it should benefit the warehouse, but it is not benefiting. It has become another layer. Rather than this another layer, if the WDRA can act as a depository or a registry of all those receipts and can accredit the agencies, say a collateral manager is in one agency, he can appoint as a WSP or kind of the way NCDEX of the exchanges appoint. And that can bring into the fold of financing part. Any farmer coming to a mandi, once he gets the e-receipt at that moment only, no need to have a physical trade happen, physical goods movement to the trader or processor or end consumer. Rather than, even the government agencies can procure stocks based on the e-receipt. Basically for a trade, what the things require are the type of goods, quality, quantity. All those things are mentioned already in the EWHR. So the WDRA accreditation and WDRA can work very well in the rural market. This is where I found it to bridge that particular gap from 50,000 or 40,000 crore commodity business to scale up it to a 1 lakh crore. This is in near 2-3 years time down the line. Can be possible if we implement this. I believe WDRA has taken certain steps into this. So I'm really hoping to do this.
We hope that too, and that's an opportunity and a challenge as well. Thank you, Pravin. Tilkesh, what's your sense? As an exchange, where do you see an opportunity arising in commodity finance there?
Thanks, and good afternoon, everyone. All seniors from my industry and other colleagues. The growth, the way I see, is basically on three types of, dependent on three types of entities. One is to grow, we need space. Second, to grow, we need something called base or vehicle on which we can grow. And third, there should be some fuel or some stimulus to grow. So all these three entities, again, can be definitely categorized in a classic 4-quadrant matrix, which is on the horizontal axis, you can say explored and unexplored. The areas where we have explored, where we have not explored. And on y-axis, you can obviously say that areas where you are deep or shallow, depending on how much you have explored. So when we come back again to space, when we want to grow, again when we talk about commodity-based finance, there are three types of entities that we can talk about. Growth in terms of three entities. One is number of lenders. Second is number of borrowers. So when we are talking about growth, obviously we are talking about both growth of number of lenders, number of borrowers, and third is the number of commodities based on which we can grow. So this is one aspect of space where we can grow. Second, when we talk about the base because of which we can grow is the kind of products. The wider the products that we have, we can definitely grow faster. Then we can talk about another base which is called infrastructure. The types of infrastructure, not only about the warehousing, but infrastructure facilitated through some technology. So, and infrastructure facilitated through probably licensing and other things. So this is the area where we can grow. Third is the stimulus of fuel that we are talking about. this one is very critical and very important. If we have these two already there and the third one not being there, then also we can't grow. The third, what we are talking about, to remove the roadblocks, whatever impediments that we have, and how further we can grow. For example, introduction of dematerialized financing, or we can talk about other hedge passport and so many other areas that we can talk about, which facilitates. We can remove roadblocks such as FSSI and other ECA kind of norms. So if we take a holistic approach of all these three aspects, probably we can talk about growth.
Absolutely. Tilkesh, we'll come back to you for a solution of that as well. You mentioned the problems there, but we will come back to that. But Ashish, as we were talking before the session as well on how the goods commodities change from one hand to another quite fast, and how almost every part of that value chain seems to be asking for finance. How do you see resolving that? How do you see that resolved?
Absolutely, Manisha. In the morning, Mr. Shembey was telling that ideally this commodity finance should be called as agri-value chain finance. So though we as a banker, we are financing to various sectors of this agri-value chain finance, we are financing to farmers, we are financing to traders, we are financing to processors, we are financing to corporates. But as of now, we are financing into an isolation. So we have to change our approach. Instead of isolation, we have to adopt an integrated approach. Whereby if I am financing to a farmer, it should be in a tie with the corporate, or it should be in a tie with the processor, whereby processor can be financed. Subsequently, if I am financing to a processor, it can be in a tie with the corporate, so that it's an integrated approach. It addresses many of the issues, challenges which we are right now facing as a banker. We are facing into this business. Like it addresses the commodity ownership issues. It gives me a trail of that commodity. And as of now, how it is happening when I am financing to a farmer, and whenever any trader has to purchase this commodity, he'll pay me first, and then he'll take the goods and then store in some other warehouse. Again, I have to finance in that warehouse, and then again whenever the tenure matures, he has to repay the goods, and then again the goods will move into a processor location, and again I finance to a processor. So this is increasing the logistic expenses for the same commodity. It is changing the hands. So why can't it be there is a standardized warehouse where the commodity is lying and only the borrowers are changing? Today I am financing to a farmer. Tomorrow, if suppose some trader comes for purchasing that commodity, the same loan can be shifted in the name of trader without moving the commodity from that place. Similarly, if it has to be purchased by a processor or corporate, it can be directly purchased directly, and the loan can be transferred in the name of processor or a corporate, rather moving this commodity from one place to another place. That's the one point. And second point, I personally feel, because I am associated with this business from the last almost 10 years, I still feel there is a dearth of technology used in this space. In fact, 10 years back, when I was in a particular branch, when we have started this business, at that time also we used to get a physical warehouse system from the warehouse, which we used to finance. And today also we are getting the same physical warehouse system. However, if you see the banking from those days has started from branch banking to mobile banking to tab banking. Though this pledge finance is still lying at that era only where I am getting the physical warehouse. Why can't it be, I am visualizing, I am giving just a thought, why can't be there is an era where the supervisor who is stationed at that warehouse, the moment commodity comes in the warehouse, he'll have a tab banking or something like that, he'll punch on those critical details from there itself, and instantly the information will flow to the corporate office, and within minutes of time it will come to the banker from where it is supposed to finance. And I am sure within 1 hour or 2 hours the banker will finance to that depositor. So this will infuse a confidence in lender also. Okay, I am getting the information on real-time basis. Second thing, the TAT which right now is taking 2 to 3 days will get reduced to 1 or 2 hours also. And just visualize, today Staragri is managing warehousing space of more than 10 lakh metric ton. Just visualize a position that they have an online data of those entire commodity which is stored into those 10 lakh metric ton warehouses and which is viewable to multiple buyers. So then the depositor or the person who is taking the pledge finance is getting a remunerative price also, because now this commodity is viewable to multiple buyers. So I feel there is a dearth of technology used in this space, and if it can be addressed, I am sure it will, in coming days, this business is going to boom like anything. Thanks.
Gurinder, what is the sense? When Ashish says that things can be done such easily, why? And as he pointed out, Staragri does do so much of stuff. What stops you from putting everything online so that the banker can see it immediately?
See, it's just about the confidence of the banker on various, you can say, instruments. It's not very difficult to put in.
He has confidence.
He has a confidence. There is a cost to everything. So there is a technology cost. Although you can say most of the warehousing companies need to look at that cost. That's where some of the audience was asking on the question, the type of risk a collateral manager who is taking, whether the cost can absorb within the payouts which are happening from the bank. So it has to be a very integrated thought process.
You want funding for that also from your
Yeah, absolutely, absolutely. See, but I think the way forward is technology, the addition of warehouses. See, as some of the panelists were speaking, the future in next 20 years or so, the time or the quantum of commodity which will be available in the market, and to address that, the physical instruments cannot play a very strong role. So ultimately everything has to move into technology. So earlier the better. So this is a very good, you can say, advice and way forward. I think most of the curriculum managers should take it and move forward.
Pravin, this one is to you. You talked about WDRA on your opening comments on how layered the whole business seems to be getting. Would you say that it is fragmented, it perhaps is not the most transparent of businesses, and how do you give a solution to that?
See, at this particular level, I feel there is a next stage to move on into commodity business. The way Ashish said, in 2005, 2004, when the business started in various banks, today also we are doing business in the same way, same fashion. And there is an appetite of banks to do this business in this way. Because I feel that, yes, no bank would have portfolio more than 2,500 crores with the same pattern of business. If we want to grow more into this particular space, we want to have more technology, more comfort, more operational risk mitigants. Then only this business can grow. Even the bank can think of growing this business beyond this level. Because today when bank is managing this much portfolio, bank is feeling a lot of operational risks and problems in this particular portfolio. But unless there is no technology, the way Ashish told, if the technology comes, banks will have another, you can say it's another booster to reach to another level of maximum that, okay, yes, bank will be more confident to do 10,000 crores of business in particular product.
Another thing I would like to add what Pravin has said. Banks do have a certain degree of appetite on the commodity-led funding, and their guidance is purely on their PSL guidelines. If certain bank is able to fulfill that guideline within a certain time, so it does not look at commodity financing as a very positive, you can say, product, because it doesn't give it a very strong yield in itself. So that's again one area where banks should start looking it beyond a PSL requirement as set by the central bank, and they should look at this product as a viable, commercially doable product in itself.
Tilkesh, coming to you, you talked about DMAT earlier, and you also were talking about on how FSSAI increases cost, though it is an important part because quality and quantity of a commodity also needs to be known. How do you look at the ease of doing business there? And also, while we are talking about the exchange, E part of it, how do you see that happening in the physical or the spot markets?
I would start with the first privileged financing that exchange is doing. Currently, if we see the cost of finance, it not only includes the cost of handling the WRs, as Ashish has rightly pointed out, it is also about the risk related to cost of financing, which means quantity, quality, and the risk related to price management. At NCDEX, somewhere probably we are able to offer at least one solution to one of the technology solution that he is talking about is that about dematerialized form of warehouse receipt. So the financier doesn't have to really take care of the physical warehouse receipt as such. Second portion that we are trying to answer out is in the earlier session also Mr. Raj from NCDEX has spoken about it. It's about hedge passport, which is nothing but essentially taking care of the price management risk of each companies that bankers are financing. So this is another option that the way you can manage your risk. Third, you rightly talked about, which you asked about FSSAI and EC. How is it going to impact? It is currently impacting in terms of the cost of management for warehouses through this warehouse service provider is significantly high. Today, look at the number of licenses that they have to take, and still, then they are not able to mitigate the risk of ECA coming and blocking the goods and all. So yes, these are the impediments that we really see and sooner or later, recently there was a very good amendment that WDRA accredited warehouses will not come under ECA. However, in just recent past, this has been removed. So this policy going on and off is really giving us some jittery situation. But yeah, if this is done, probably we are poised to grow.
Thumbs up to that then. We have, I think, just enough time for you, Mr. Sebastian. What's your sense? I mean, we talk about technology and banks and financing and logistics and everything, but farmer, how do you see that evolving? What do you see going that direction?
I think we sort of induce the farmers to the habit of keeping their produce in the warehouse. As told my colleague from NCDEX, if you consider the crop loans extended by all banks in the country, vis-a-vis the exposure through WHR, I don't think it is not even 10%. Okay, not even 10%. So there is theoretically a lot of scope for increasing the exposure to the farmer, number one. Number two, though it's a repetition, there are some enablers, I think, which we have to put in place for the farmers to induce into the habit of putting their produce in the WHR. They have to be made aware of the benefits of the same, and going forward, even government can think of some sort of comfort in terms of probably interest subvention or some risk funds to induce them into that, because we know that the post-harvest loss in the country is quite substantial, probably around 1/3 of the total production. As of now, the subvention is available for an amount of 3 lakh for a period of 6 months if it is a negotiable warehouse. Probably we can see we have a pre-harvest subvention limit of 3 lakh now. The same thing is extended. Obviously, when you are, suppose if you are incurring say 100 rupees for producing some amount, then the market value will be, probably you can say 50% gross margin, it will be doubled. So the subvention amount or the support amount from the government side also may be increased, so that we induce the farmers into this habit, thereby we are kind of creating a safety net. I think that is my view.
All in good time. We really look forward to that. Suresh, I hope we haven't spilled into the next show there. Thank you so much, people, and thank you so much, panelists, for keeping it informative, crisp, and of course to the point. Thank you so much.
Manisha, since you finished so quickly, you do have some time for audience questions if you'd like.
For sure. Yes, please.
Can we get a mic?
So I have a question which is like a bit, right? The question is it necessary for the farmers to bring their stock to the warehouse? Can't the warehouse go to the farmer's place? So
That's a good one. Who do you want?
anybody from Staragri or anybody?
Yeah, I have a suggestion in this part. In fact, there's one very good model which NABARD is promoting is hub and spoke model. This says it's not viable to create a big warehouse or in a small town or maybe in a small village. So you can have a spoke model out there, and there can be a hub. It can be tagged with a large warehouse which is located nearby the APMC. So this can be very well addressed through that hub and spoke model for those small type of warehouses. Anyway, NABARD is giving a subsidy in the name of farmer to the tune of 25% or 33% depending on the part. So a pool of farmers or group of farmers can create that small godown where the commodity can be stored and substituted, can be moved to the hub, and it can, the pledge finance can be started from the hub itself.
So I'm hinting towards a mobile warehouse. For example, like an Agarwal packers coming with a container and taking our material out of your house and then taking it some other warehouse. If you have a container somewhere which goes to a farmer's doorstep, which I think the CM should think about, and the farmers will stop, we will know. And second thing is gunny bags necessary, right? So that is also another part that I want to talk about.
Once it is financed at spoke, so now it's moving in the custody of collateral manager. It is coming to hub part only. So finance for the bank will start from that stock and will continue till the hub until it is getting sold out.
Okay, and the Staragri, are you all thinking of having barcodes for the gunny bags? So it will be easier for people to release it or to stock it or to fund it like. So each and every bar scanner, so I will have my person to just scan it out in the barcode and check it out in the app that yes, it is there or not there. So is there some thought gone from the CM side on this?
Yeah, I think there's a very valid thought whereby the identification of the stock happens through the mobile application or something like that, and that is a very workable solution, and there are some model warehouses where we are trying to create a infrastructure which gives a lot of comfort or added comfort to the bankers. Like in the mobile warehouse is also a container going to somebody's place, and a bank is willing to fund that. As a collateral manager, we will be very,
we'll be very happy to do it. In fact, if a CM comes up with
so I think that gives an idea of a wonderful new product which can come up.
We are okay with
logistically
come out with it.
cost is taken up. So I think we can, as a Staragri, we can work around that solution to a certain extent. And let's see.
At NCDEX, we have just recently launched a project where we are introducing RFID tags for each of the banks, which come and gets offloaded in the NCDEX warehouses.
Thanks.
Any other questions? Mr.
Actually use what is called RFID.
We'll just get a mic to you, sir.
So I think my voice is loud enough. You can use RFID, radio frequency identification, for each gunny bag. That's what the organized retailers use for the small branded bags. I think that's something we should be exploring.
Right. I saw hand go up in the back. Any other questions? Right, it seems you have covered all the topics given to you. There are no questions from the audience. Thank you, Manisha. Thank you, gentlemen. May I request you to stay on stage?